Hi, this week in Phoenix real estate, there's a lot of talk about how many investors are in the market, the unusual high number of investors. Here's Tom Ruff from the information market. He says in August of 2020, nearly 91% of all homes purchased were by traditional buyers, and by that he means individuals or married couples. But in August 2021, the number fell to 75%. That is a huge difference. It should be noted that the appetite for institutional investors as well as iBuyers can change quickly for a myriad of reasons. As we've seen in the past, they can enter as well as exit our market quickly. Mike over at the Crawford Report cuts the numbers a little bit differently. He's looking at August to August. He says sales of homes intended to be primary residence were down 14% in August, but the sales intended to be rented up 97%. Sales intended as second homes up 98%. Mike thinks you might see prices starting to increase again in the fourth quarter. That's not my expectation at all at this point. I expect it to be flat through the end of the year. And I'm thinking if iBuyers, one reason they came into the market so strong was that the prices were increasing so fast. They bought a house, they sell it 2 months later. It's already gone up 30,000. So they were making a ton of money and they started buying a lot more. So now that prices are flatter, they're going to decide, you know what, we have a lot of houses in stock now. Maybe we should sell more than we buy since prices aren't going up as much. So that could be a factor. My biggest worry is kind of related to investors though, and that's that what happens if the stock market crashes or we start getting a lot of inflation? Do a lot of people start investing in real estate? Because all those investors make house prices become more like stocks. We see how variable the stock market just goes up and down. It's crazy. And the more investors involved in single family homes, the more likely home prices will become like the stock market. Okay, here's the day I updated on a graph, and you can see it was barely up in August compared to July, just a tiny bit. You can see the graph here. If you click on the graph, you'll go to the interactive version. Well, let's do that. You can see it's leveling off here, or it's slowing down the increase a lot. But this is the one I want to show you. Here's the inventory of homes for sale. I thought it would be it's going up, but I thought it would be going up faster, and it hasn't because of all the investor activity. They're buying so many homes. If they hadn't been in the market, I hadn't expected them to come into such a strong rate, to be so many investors. If they hadn't, this would have been higher by now. Obviously, there'd be more choices for home buyers who are going to live in the home. And FYI, here it is on inflation-adjusted prices. Prices are higher than they were at the top of the market in 2005 on an inflation-adjusted basis. If you adjusted it for income instead of inflation, it would still be lower. As far as the weekly data goes, there's nothing too interesting, too different. Here you see that the number of homes that are for sale is increasing some, so it's going up slowly. I thought it would go up faster at the beginning of the summer than it has, partly because during the summer there's been so many purchases by investors. Great. Leave a comment if you have any questions, or just call me or email me if you have any questions about the real estate market. I love talking about it. Take care.